Welcome to the channel, guys. Forex Co here. Today I want to talk about the best support and resistance forex strategy. In this strategy we'll be using the sweet spots. Sweet spots is these lines. These lines move in 50s and double zeros, and also in 25s. The dotted lines are 25s. So in this strategy you're also going to need the 50 EMA. So like the market makers and the banks, whatever you want to call them, they like to move in 50s. That's where they like to trap people, guys. So the banks, the market maker, whatever you want to call them. So this is a simple strategy, guys, and I've made a lot of money using this strategy. So let me go ahead and show you like how we use it. So as you can see, guys, the 50 EMA will help us to know the trend. If the price is under 50 EMA, then we are in a downtrend, and if the price is above 50 EMA, then we are in a uptrend. So starting from here, price went above the 50 EMA. So what we wait for, guys, is that we wait for price to come to the 50 EMA and the sweet spot. It can be the 25s, can be the 50s, double zero, whichever, guys, as long as price comes to the 50 EMA and the sweet spot. That's our support and resistance. So another thing that we have to look for when price comes to the 50 EMA, the things that we have to look for is that the market loves to make 50, starting from 25 to 50 stop hunts. So that is what we're going to be looking for. So as you can see over here, price came above here, and then it came down, and if it can use the measuring tool, that's a 75 pip stop hunt. So even this stop hunt is valid because the extended stop hunt can be 75 according to whichever pair that you are trading. So when price comes to this sweet spot over here, what we wait for is that we wait for our confirmation candles. And then as you can see, we started here by this red candle, it came to our number, and then there's this candle, the green one, but the green one doesn't engulf. So at this moment we do not enter, and then comes the red one, the blue one, and then this one engulfs these other candles. So when we see this, guys, and it's happening at the numbers, what we do is that we position ourselves in this trade, guys, and then we take the trade. Your stop loss has to go to the next number below. So here, as you can see, our stop loss was going to be somewhere around 37 pips, 40 pips. So if you can see, then the following week price went 50 pips, guys, 50 pips. So if you trying to have a risk to reward, a great risk to reward, what you can do is that you can still hold this trade, and then when price comes here, as you can see, it did a 55 stop hunt. So it came to our number, and then immediately when price, the green candle closes above the 50 EMA, guys, is there that if you want to enter another trade, you can do so. And then we put our stop loss 45 pips, and then by now you have two positions. You have this one that started over here, and then you have this one which you just entered here. And then just by this position only, 90 pips, guys, 90 pips. So you can take your profit there Or if you still recognize that the market is trending, you can add another position when the market retrace, and then it does retrace 69 pips, guys, and then to the number again, to the number, and our confirming candle comes, it engulfs this other one, and then you can enter the trade again, guys. Don't forget where we put our stop loss, 33 pips, and then if you let the trade ride 130 pips, we can go to another pair and see. And the thing that I forgot to tell you, the thing that can give you an idea that maybe this trade you shouldn't take it, is if you see that the 50 EMA is in the middle. It's in the middle, like here. Price goes above it, goes below it. That means that the market is not trending, because this strategy works best when the market is trending. So even if we don't go far, as you can see here, Euro USD did a 75 stop hunt, 75 pips stop hunt, and then here it was a red candle, and then the bull candle came, it didn't engulf. This is also an entry candle, guys, because this, we call them railroad tracks. So you can enter here, and then you can put your stop loss below the next number. Remember that, below this number. So our stop loss was around 32 pips, and when you write the trade, it went for 140 pips, 140 pips, guys. So as you can see, this is a very powerful strategy, and if you use it, like, I guarantee you, you'll make money, as long as you do include like the factor things in forex, like your risk to rewards, things like that. So if you can see here is 34 pips, and then if you divide 140 by 30 pips, you can see that your risk to reward is very good, guys. If you can go back again, here's another entry, railroad track entry. If you come here, this was not a good entry, because this one did a railroad track, so you could enter here, and it's a W. If you could check on the lower time frame, that's a W, guys. That's another entry candle, so you could enter here. So it took a little longer, and then but at the end of it all, it did go 160 pips. So as you can see, guys, this is a very powerful strategy. If you have any questions, you can leave the comments below and ask your questions, and I'll try to put the sweet spots indicator, and then the 50 EMA, you do know where to find that. If you have any questions, you can ask me below, and don't forget to subscribe to the channel, guys, like it, and we'll keep on providing you with the best content for forex.